Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of August the 11th, 2025. Now, to get started this week, we'll begin where we usually do with the US dollar index. Now, we can look at two different ETFs here, the UUP or the Wisdom Tree Bloomberg, the USDU. Either one, very, very similar signals, but let's look at the USDU. Now we have three lines of support here running right along the T-cross long. We know that the US dollar index or the US dollar in general does not do very well the week after the non-farm payroll, regardless whether that number is good or bad. So this is perfectly normal with what's occurred here. And now the signal here, we do have a medium crossover to the downside, but we don't have a long-term crossover. So again, the main support for next week coming in at 26.27. That is the key level. If we can hold above this, the dollar can likely recover. But as I've talked about and warned everybody that there is dollar strength pending. Usually it's the end of August into the month of September. That's usually when I see this dollar strength, that seasonal pattern in the US fiscal fourth quarter. So right now, you can see using the predicted RSI with a 60-40 split, we don't have momentum on the downside in the dollars. So really, guys, we're just pretty much range trading for the most part. So if I do a comparative analysis, direct comparative analysis to the Euro-US pair, we can draw a line right across the highest point of this past week. That level there will come in at or about 117. The top of the overall range, which is at the quarterly opening price, 117.87. As I've talked about in previous weekly outlooks, that we're basically trading between the monthly and the quarterly opening price. We sell one and buy the other, but I would not necessarily buy the euro in the month of September, given that seasonal pattern. So again, the euro is still the primary trend for the year is still up, but it is very unlikely that the euro will be able to break through the 117.87 mark. Now, when we look at the equity markets for this past week, they continue to do well, as you can see, running off that monthly opening price. That area coming in at 626 on the SPYs. We've accelerated off of there multiple days in a row. So again, making all-time new highs recently over here on the SPYs on July the 31st. But that would be the area we would need to break above. The indicators in VP are bullish going into next week. The predicted RSI is showing momentum on a break of the 60 level. This is a 9-period predicted RSI, by the way. But the main thing is the 60-40 split. We're looking to trade momentum here, not overbought, oversold. That's a critical point that I want to make because, again, every time the S&P has moved lower, that's been a very good buy on a dip since about May. So we'll continue to run along with that for now. Our T-cross long, that area coming in at about 630.05. We want to hold above that and the monthly opening price. When we do a further comparative analysis to the German equity markets, we can see that they're slowly recovering, and this has a lot to do with the Euro-US pair. If we look at the DAX 30, again, can be tied to the euro currency. When we look at the euro-US pair and we look at the direct intermarket correlation, this is very important that we understand that the euro and the DAX are basically moving up and down together. And in most cases, that's not really how things work here, guys. What the way it had predominantly has been, is euro up, DAX down, S&P 500 up, dollar index. So basically, if the DAX is going to continue to move higher, then it would, in theory, require the euro to move higher also. So just for my German friends, always remember that. Keep an eye on that euro currency against the US dollar, because again, very, very important that we're watching these things. So right now, the DAX holding above its monthly opening price, clearly bullish while above that level. We're moving above the quarterly at 44.56 on the ETF side. Our MA diff cross looks good, and we're building momentum here. But remember, I think it's very unlikely that the euro will surpass the 118 mark going into September. Now, it may in October or November, But September is going to be a very difficult time for the euro, in my respectful opinion. That could change with the tariffs and everything that's going on, but I think it's very unlikely. So again, trading is more about probability. And with probabilities, again, with that strong seasonal pattern in September, that could put some downward pressure on the euro later this month and into the first part of September and the month of September in general. So we'll continue to monitor that and update everybody as we go. But for now, going into next week, the DAX is likely to move higher, and it's supported by also the euro moving higher. But always keep that in mind of that seasonal pattern. Now, the gold market saw strong buying this week with the tariff announcement, but again, gold remained bullish to begin with. We've been holding above the calendar yearly and monthly opening price, the quarterly opening price. Everything's still looking very good here. The position of the momentum building with the gold long trade looks good. MA diff crosses up, but always remember again, guys, gold predominantly does very well in late October, November, and December. So September could be hot now with the tariffs. We'll see how this one plays out, but the indicators at this time still remain quite bullish. Now, for oil traders going into next week, oil really taking a hit, drew the trend line in from last week. But now we've broken down below the calendar yearly opening price, in my respectful opinion only. As we move into September and October and November, I move from oil to nat gas. So nat gas contracts doing well this week as oil starts to move lower. But this is looking quite bearish for oil, also potentially pointing to recession, maybe. So again, but in most cases, the seasonal oil contracts start to weaken in late August, mid-September. But for next week, we have very identifiable resistance here. The yearly opening price, that's coming in at 76.84. Then we have our T-cross long, 75.93. So a lot happening there with oil, but I would respectfully submit the breakdown below the calendar yearly opening price with the T-cross long sitting right there. That was a very, very good short trade, but I think we have further downside on this, potentially back into that $65, $70 a barrel mark at the very minimum. And again, keep your eye on nat gas contracts because they usually do quite well. Now, with the VIX, always good to keep an eye on the VIX here. Pretty straightforward check on this for this coming week. We're below the yearly opening price. The global equity markets are looking decent. Are they overbought? Well, they've been overbought for many months, if not many years. So it's not a reason to sell. The longs on the global equity markets remain in place. The VIX is confirming that. But a bigger signal appears to be forming. The breakdown below the 60 on the predicted RSI, the breakdown below the yearly opening, the monthly opening, and the T-cross long, so we can see where all of the resistance for next week is. Right around 42.43 and the yearly at 44.24. Now, with Bitcoin going into next week, again, trying to recover here. It didn't have a bad week at all, but it's still struggling around the calendar monthly opening price. So the structural way I would look at this is the primary trend is up with above the yearly opening price, 93,804. On this particular quarter, Bitcoin is doing very well, above 107,598. But the monthly opening price is where it's struggling, guys. So excuse me, that's the area you want to keep your eye on. Now, the T-cross long is sitting there also, 115,964. That's the level we have to stay above. The monthly opening price, 116,501. This is critical resistance and support, depending which side the market is on. I believe Bitcoin will move lower going into September, and then it will recover dramatically in October, maybe even late September. But for now, still moderately bullish. But you can see all of these verified zones here also represent a number of lower highs. So if we can't hold above that monthly opening price, then Bitcoin is likely coming back into that 107 range. Now, when we look at some of our main Forex pairs, we've looked at the Euro US, the pound dollar. Again, always remember the G7 pairs have one thing in common, guys. They're trading against the US dollar. So if the US dollar can recover, then those pairs will drop. Now, the pound has made it back up above the T-cross long. We're holding above the monthly opening price, but it's the quarterly opening, 137.33. That's simply a retracement point at this point. The Bank of England cutting rates, they're starting to sound more dovish. So even if the Fed does end up cutting in September, they're just getting in line with the other central banks. So it's kind of a standoff there between the central banks, but they're all going to be dovish to some degree. So again, I think we're retracing towards the 137 level, but again, by the end of August, going into September, we would be looking for shorts on this particular pair. Now, again, looking at the US Swiss franc, again, a dollar-based trade here, and it's running sideways. This is a great leading indicator for the dollar in general. The Swiss franc has been very strong against the dollar, and it's struggling here. The dollar is holding its own. The T-cross long, 80.46. That's the level we want to watch for next week. We're positive on the quarter. The US Swiss franc has not been positive on any one of the quarters this year. I don't believe. I'll go back and check that just to make sure I'm saying something accurate. So you can see when we started the calendar year, again, we're struggling right out of the gate. We opened up the quarter here, very bearish, but we're holding now above the quarterly opening, just like the dollar index. So keep a very close eye on this particular pair as a leading indicator, actually, for Euro US also. Now, looking at the dollar yen this week, the dollar yen, again, it's all about interest rates here, guys. So if the carry trade is in trouble, then there's going to be downward pressure on the dollar yen if and when the Fed decides to cut. And how much is he going to cut? How often is he going to cut? All of these things need to be answered, right? So September will be a hotbed in the currency market, the equities, and particularly in the futures and ETF side. But for now, the dollar yen basically running flat here with a slight downward bias towards the end of the month, when I anticipate it could move higher just for the month of September. So we'll monitor that, but the T-cross long 147.48, that is the key area. Now, one of the final currencies I'll look at for next week is going to be the Aussie US, again, an equity-driven currency, but it's also a gold and copper-driven currency. So what we're looking for is for the pair to remain above 64.27. We target 65.81, but I think this pair will struggle around that particular area. If we can get above 65.81, we're going to have a clear run at longs for the remainder of 2025. But I don't think that's going to happen until October. So right now, if we can hold above the VPT cross long at 65.08, then longs are reasonable. But again, if we can't hold above that level, then we could be turning lower, and multiple other trades could actually spin off of this. So again, keep an eye on that key level. The Kiwi has not done anywhere near as well as what the Aussie has. The Kiwi has struggled this whole time. It's been under pressure from the Aussie-New Zealand cross pair, but same deal here, guys. 59.55, we need to get above that area, but we're losing momentum. You can see the predicted RSI is struggling right on that 60 level. When we look at the Aussie, we can see the same thing here. Everybody uses the predicted uses an RSI, stochastic, different indicators for overbought and oversold when they're actually designed for momentum. And this is saying there isn't a lot of momentum on the Aussie or the Kiwi. So that's something we always want to take into consideration. And then, of course, we have the US-Canadian pair. I'm kind of mixing it up a little bit this week, but US-Canada is holding, but terrible unemployment numbers coming out of Canada again. Unemployment number holding steady. That's about the only positive I saw in the entire report. So, and we've got no trade deal with the US. So there's going to be volatility on this. But always remember that the Canadian dollar is driven also by oil, not natural gas. So again, there could be problems ahead for the Canadian dollar. And as long as we're holding above the T-cross long at 137.40, longs are in play. Now, we do have a medium-term crossover, but we don't have a long-term crossover. This could be corrective in nature. We need to combine the crossovers with a main pivot level like the T-cross long. So watch 137.40 like a hawk. If we're holding above that by midday, late day on Tuesday, then longs are in play. So with this volatility that will be coming in September, there will always be opportunity, but I think even August could be pretty hot this particular month. So with that said, this is the Vantage Point AI Market Outlook for the week of August the 11th, 2025.